So thank you everyone for joining. This is the third day of the AI week. Obviously a week-long series where we have talks just like this one going every single day of the week. Remember, throughout the duration of this session, feel free to pop any questions that you have, either using the chat function or Q&A function. We'll try to incorporate that as we go along with the talk. So today I've got with me Santiago, a Chief Data Officer from FBN Bank, who'll be giving us the ropes of the AI in the finance field. So Santiago, would you like to introduce yourself and we can kick off?
Thank you, Christian. Thank you, everyone, to join and listen. Yes, I am the Chief Data Officer at FBN Bank. FBN Bank is one of the oldest, if not the oldest bank in Africa. It has been there for 125 years. And basically, my role has been to help modernizing the bank. The bank was very well established historically, and like many organizations, was relying a lot on paper and manual processes. And I was invited to join the bank almost 3 years ago to start automating, to start bringing data, to start bringing smart algorithms and helping the bank to modernize in a way. So before that, I worked as a consultant in many industries, the financial and insurance industry, part of it, always with technology, with data, with information systems, and helping organizations to modernize and digitize and automate, so in that journey as well. Today, I wanted to share some insights, some ideas, some experiences around my work in the bank and also in general in the financial services, and kind of try to put on the table some use cases of how machine learning, artificial intelligence is helping to change and transform the banking industry. So with that, I know we have an hour. I don't want to talk for the whole hour. I will present some slides and then maybe open to discussion. So if you want to chat with me, I'll leave some time at the end so we can also have a two-way discussion, if that's okay. Okay, let's jump into the slides. Christian, if you want. The agenda today, we kind of agreed to talk about 3 points. So first, I want to kind of clarify what I want to kind of how I define artificial intelligence. I mean, there is all these big buzzwords can be understood in many ways, and there is a lot of marketing around that. So I wanted to kind of distinguish what can be myth in relation to what actually we're really doing, or at least my experience. And then once we kind of agree on what we understand around that, then we can go to a second point where I'm going to show how it is helping in the journey of understanding our data sources, complex systems, and helping us to unlock data value, and then using machine learning to actually create smarter insights. And from there, I'm going to then jump to a third part of the presentation where I will show practical cases on process automation from the back office of the bank to basically helping cost reduction, but also even moving to the front office, which is more the business development and efficiency gains that we're actually achieving at the moment with these smart technologies. Let's move to the next slide, where actually I'm going to start with the first point that I was saying around what do we understand by artificial intelligence. So first of all, I'd like to explain basically where all this kind of started. As you all know, probably from your statistic courses, there is a lot of interesting mathematical knowledge that help the progress of what we call machine learning. Machine learning, in a way, took statistical methods, and of course, married with the software technologies and all the data that is now available. We started from, for example, clustering methods, where a statistical method where, for example, if you have in a two-axis kind of diagram where let's say, imagine you have a population and you want to classify by, I don't know, the tallest and the heaviest, and the machine is going to start to kind of create clusters and say these are the tallest and the heaviest versus these are the smallest and the lightest. And very easy, you can cluster a population. So from there, we start talking about how the machine is taking points in that map and is easily kind of finding the most common kind of patterns, giving the variables that you are giving. And therefore, we start talking about machine learning, because the machine can look at data and very easy start computing to help our understanding and give us some insights. And we start talking about different methods: supervised machine learning, unsupervised machine learning. So the unsupervised is when the machine gives you the kind of the results. The supervised is where you need to train the machine, and you are basically as the machine produces outputs, you are correcting, and then the machine learns even more, and then it becomes even more precise. So anyways, not to get too much in all those methods, but it's just to say there is a lot of very good knowledge that was out there, and softwares that are helping doing a lot. And definitely those algorithms are being put into practice today. And we do have a lot of use cases where we could talk around that. So when we talk about machine learning, definitely some people say that is already artificial intelligence, because the machine is producing a lot of outputs that we could not compute in our brain that easily and that fast and with so much volume, etc., etc. Now we go to the next slide. There is, around that idea of those algorithms, we also start looking at more sophisticated ways of machine learning that are closer to maybe what people say is artificial intelligence, which is, for example, the natural language processing, where you will have the machine helping to understand a text or even voice recognition and even visual and recognition, which is image recognition. And from there, we start talking even about robotics. So here we are into much more complexity. And it's at that limit of the machine learning and the kind of natural language where I would say we also have some use cases. So I'm going to come back to those, but those are very sophisticated. If we go to the next slide, my point with this distinction is that we don't need to think about, you know, a computer necessarily that can sense and reason and act and be like a robot in order to say that we have use cases. I will explain in my examples that even this simple machine learning is already helping us doing a lot. And in a way, those methods that I was explaining, mathematical methods that are contained within this artificial intelligence, are already good starting points for the banking industry to start producing a lot of sophisticated automation. And of course, there will be very sophisticated ones that also come in hand. But my point here is really that we shouldn't necessarily go too far in order to create business value, to create actually output for the business. We can start easy, and my examples will start first with the simplest, and then we will go into the more complex. And maybe more than artificial intelligence, what I often like to call the AI is really that augmented intelligence. And this is really what we're going to start seeing today, is that many of these computing power that we have now with the software revolution is helping really organizations and workers within that organization to actually augment their capacity to process data, to process documents, to process files, to process paper, and in a way is really augmented intelligence that is helping to automate and partner the human partnering with the machine. And this is really where it goes. Yes, Christian, you have a question?
So yeah, we've got a question from the audience. So it's actually a question from Karina. So she's asking, aren't the results only as reliable as the data that is given to the system? Then how reliable is the given data, as it were?
Yeah, that's a great question. And I will say, of course, we need to have reliable data. I will also distinguish, it depends for what you're using the data. So some data will never be perfect, but the business, sometimes you don't need perfect to act. You need, good enough in order to take a decision. So sometimes when you're in academia, you want much more kind of accuracy and certainty. When you're in business, you basically need to act quickly sometimes, and therefore a better insight is better than just intuition. And we play between those two kind of degrees of certainty and let's say complete intuition. And in between, you have kind of a range of good data, better data, perfect data, I won't say exist. So yeah. Now, again, because I'm talking about statistics, and I started with that idea of the statistical methods, as I'm going to show in some of my examples, we sometimes act with 90% confidence, 95% confidence. That is sometimes good enough for us to say, okay, let's trust this analysis. So again, it's never going to be 100% confidence, but 90% is good enough. So it's getting closer to that certainty that we feel empower us to go ahead, rather than say, I completely know that this is true. We say, well, I think we can go ahead with that. But it's a great question, yes.
Yeah, thank you, Karina. Thank you. Please.
Okay, let's move to the next slide, where I'm gonna now start showing how some of these interesting algorithms and machine learning and statistical methods applied to data has helped me in my journey in the bank to start unlocking the value that we have in the systems. So if we go to the next slide, I like to put this image as a metaphor of what happened to me when I arrived to the bank, and I know happens to many data practitioners when they join a new organization. Imagine that we have so many systems that are legacy systems. So in the bank, for example, we have a transactional system, which is an Oracle system where it basically records all the transactions. So whenever a customer do a loan or make a payment or buy a product, all this is registered in this transactional system. Now, that transactional system has 7,000 tables. So within 7,000 tables, you can imagine how many columns and rows and how much data there is, right? And this is one system among hundreds of systems that we have. So multiply the quantity of data. So when you arrive to a new organization, you are a little bit like in a dark forest, where you know there is a lot of value in all those systems, in all those tables. There is so much information, good and bad information, as we were saying before, that will help you doing analysis. But where to start? What is my right source, and where is the good table, and where is the right information that I can trust? Very difficult. And at the beginning, when I joined the bank, we didn't have a data kind of practice before. So I was the first to create the data office at the bank. So we didn't have a data catalog, for example, which tell me in this table, we have this information, and here is where you have the trusted information to do your analysis. And I didn't even have a data team. I needed to build my data team. So how do I start? How do I start? Where do I start my journey to actually extract the right information? And there is where the machine, and again, I was saying augmented intelligence, machine partnering with the people. This is where the algorithm started to help me profiling the information. So we go to the next slide. What I first did was really using, I was talking about data clustering methods, right? Classification. What this is a slide is an example of how we start classifying all our tables with intelligent algorithms. So instead of me or asking my team to go and look at every table to find the right tables, what we did, again, this is statistics, is we start profiling tables, and the system was looking at the name of every table and the name of every column, and then diving in every single cell of every single column and say, with patterns, say, this looks like an email address, this looks like a bank account number, this looks like a product number, this looks like, etc., etc. So you give patterns, and the system start profiling, and here's where my confidence interval starts. At the beginning is maybe 70% confident, so I look at it and say, this one was good, this one was not correct. And as you supervise the machine learning algorithm, it starts becoming more confident until it comes to 90–95%. What it's telling me is personal data or sensitive data or bank account data or financial data, and I feel now is so accurate that I can go ahead and profile all my 7,000 tables. So I start with a sample of information, I build confidence, and to the point we were asking before, to a point where I feel I trust the machine now to go and automatically look at everything. Again, if I was doing that manually, I was still 2 years after trying to read all those tables. This helped me to speed my process, and in a couple of weeks, I have a data catalog of all my tables. So if we go to the next, yes, Christian?
Yeah, so I've got a question. So you said you have to supervise the learning process, as it were. Isn't that still quite manual? Let's say even if the system is quite accurate and it has already from a get-go, for an argument's sake, 70% accuracy, isn't going through each and every single individual use case still, when you assess it, quite manual and quite time consuming? I assume it's done manually.
So that is a very good point. There is a little bit of manual process, yes, indeed. In a way, it's a little bit, machine learning is a little bit the same that you teach a human person or a kid, let's say a kid, or even someone that joins my team and my organization. You first need to spend time with them, and you first need to tell them, look, this is what we want, and go and do your analysis. They come with their analysis, and you say, oh, not right, better here. Or they come with a good analysis, yeah, oh, you got it. The more you give feedback to the person or the machine, the more they're going to improve. So yes, you put that time at the beginning. Once they get it, they go and do their thing. You don't need to look at them. So that manual process is, let's say, a little bit investment of time in order for you to be confident that you can trust them and let them go. Now, some machines, and there are some methods where you don't supervise at all. And yes, those are not time consuming. For this particular case, you need to invest a little bit of time, but the trade-off is that you know that you trust the system. It's not a black box. It's something that in a way you have trained to the point that you feel, I know what it's doing now, so go ahead with the rest. Yeah, so it is a trade-off, it's true, but it's the trade-off to get confidence if you want. Yeah.
Thank you.
Excellent. So if we go to the next slide, let's move on. Basically, this classification, the first use case there was for the GDPR. The GDPR is the General Data Protection Regulation that asks every organization to classify your own data in order to protect personal data. So because we have now organizations so much information about our customers and our staff, we need to be in control of it. And here, basically, I got the buy-in of the business to buy these machine learning softwares in order to help me classifying the data so we comply with the regulation. But as a side effect, it allowed me to actually understand my data and catalog my data, right? And it is from there that I start then getting value. So let's go to the next slide. If you continue clicking next, please.
In the meantime, as we go, so let me know which one is the correct slide. Is it this one, or should I go next?
Continue. This one has a couple of arrows. Yeah, continue. After that, okay. There we are.
But before we move on, so there's another question from Karina, who is asking, what is used in investment banking? Is it supervised or unsupervised? I assume she's referring to training.
Yeah, I would say it's more about the use cases. Depending on the type of use case, sometimes I would say more often my experience has been with supervised, because often we want to know what the machine is doing, right? And having an unsupervised method often is a little bit more of a black box, but it depends on the use cases. Some use cases, and I'm gonna show later, for certain type of use cases, you can do unsupervised, and that's good enough as well. So it really depends on the use case, I would say. Yeah. So the first use case I had once I did my data documentation and data classification and data cataloging, I was saying, was to help me doing migrations. So as you know, we are more and more moving towards cloud computing, which means that all our transactional system was in servers in the office, and now we're moving things to cloud. Now, in order to move things to cloud, which has a lot of advantages, and now with all the remote working, cloud computing is becoming a mainstream because it allows people to connect from everywhere, and it allows you to have a secure environment even if you are working from home. So more and more we are needing to migrate our systems. Again, here the machine is helping us guiding that process, because not only I know what I have in my 7,000 tables in my system, I can migrate it to a landing space in my cloud where the computer and the machine is matching tables against tables and is matching data against data. So I make sure that everything I migrate is accurate and I don't lose anything in the meantime. And this for a bank is very important, because when you create a migration, if the moment you switch off a system and you switch on your next system in the cloud, if you lose tables, you will lose customers' information or transactions information or product or money. So very important use case. It's a little bit of the back end of the use cases, but it's important to know that behind all that, we have this machine learning. Let's go to the next slide. Next slide. So the previous slide was about managing complexity of tables. This slide is also helping us improving the data storage costs, because the machine will help you where to see where there is redundancy, where data quality is low, where which tables are not accurate, and you can actually leave them aside. So in a way, reducing cost and improving quality. So this goes as well in the direction of the first question. When we start classifying and knowing our data, and we create, for example, a migration, we can also improve our data, make it better for the later analysis. Let's go to the next slide, please. Okay, so here is where we will start having our value out of the data. So the same journey I was having when I arrived to the bank, and I say it was like a dark forest, the same will happen with every business analyst within the bank. If they don't know which table to go and grab to do their own analysis, they will be lost in that forest. Now, once you put a data catalog, it's a little bit like giving you a map of the forest, so you know where to go and grab. And that allows you to start doing what I call the self-service. So it's helping people to themselves find their own data sources. It's a little bit like when you go to the library and you have all your taxonomy of all the books, and you know how to easily find the book you are looking for. This is what the machine is helping me doing, is really helping my analysts navigate the table so they can find the right data. So the system will then start tagging and cataloging every single table and data source, and will even give me statistics of which data sources are mostly used, which data sources help doing an analysis about investment banking or about my customers or about. So basically the machine start learning, and here a good example of unsupervised machine learning. The machine will learn by itself by the data of the usage of those tables. So here I don't need to supervise this, because the machine will count the traffic and the usage of how people are using those tables, and will create statistics of it. A really good example of how basically those platforms help me optimizing and managing the use of my own data, right? So with that, we start having interesting use cases. Let's go to the next slide. The first use case that we managed to do that, to do from this data cataloging and the learning of the machine of the use of the data, was that, funny enough, we managed to reconcile our balance sheet. So you're gonna laugh a little bit, but our bank, before we started all this process, has never managed to reconcile the balance sheet. That, even if that sounds very strange, imagine that we are a 120 years old bank, and 30 years ago, when there was no systems and no real kind of data governance and data quality, somebody put in the wrong cell the amount of certain loans, and loans that will actually live for 20 years. What happened is today we need the numbers of every single loan in order to be able to reconcile the numbers, but those numbers were not in the right cells. And without the machine helping us finding those points of information that are lost in tables in the wrong cells, we couldn't reconcile the balance sheet. Now, the machine managed to help us, guiding us, instead of looking at 7,000 tables, say, we think that there is a 95% probability that those numbers were inputted in the wrong cells, and they probably are in these 10 tables. So instead of looking at 7,000, it guides us to 10, and we look on those 10 and bingo, we got the right numbers 20 years after, and now everything is reconciling. So that is amazing, because in a way, it could cost a lot of money, because you have a risk factor when you need to guess certain numbers, whereas here everything is precise now. So again, you are improving your data quality with this feedback of the machine working with the analysts, and the analysts trying to actually find the right things and guided by the machine into the table. Let's go to the next slide. Yeah, this is kind of a same example of the balance sheet. So basically what we did with that, if you click again next, what now the machine is doing is not only reconciling the balance sheet, it allowed us to train the machine to do the analysis that people need to have. So every day we receive an email with actually the numbers that people need to look, as opposed to before they needed to go and find numbers to try to reconcile. Now the numbers come to them with the analysis, and in a way help them spotting business opportunities and manage better the profit and loss of their own customers. So again, the machine is in a way bringing you the insights, as opposed to you trying to find every nugget. So that was an interesting use case that came out of that balance sheet reconciliation, which is helping to manage the P&L of the customers. Let's go to the next slide. Now that I show you how we navigate the data and the systems that we have, and we manage to empower our own analysis, our own analysts, with the algorithms of the machine so they can find their own data value. Let me show you some examples of how that is now helping from the back office to the front office, more sophisticated process automation. So this is a first example that we had in the bank. 2 summers ago, we had a deadline where basically we need to do some investigation of our transactions. Every bank needs to investigate every transaction. But because we work in Africa, we had a huge amount of transactions that needs to be very, very detailed investigation. So we kind of go after anti-money laundering kind of problems, and we need to prove that we are very, very robust on that. The problem is that as the bank grows, there is more transaction, and if you have too much transaction, you have too many investigations, right? And last 2 summers ago, we had an audit that was showing that we were not managing the backlog of those investigations quickly enough to deliver confidence to the regulators that we were kind of investigating everything in time. So we basically needed to improve our algorithms. However, to improve our algorithms, again, we needed to match tables that were in different places, and in a way, look at how we were detecting kind of the transactions that we were investigating without having too many false positives. And again, this is a problem of statistics. When you have a statistical analysis, you will have often some false positives. Now, in a backlog of investigation, the false positives are making you lose time investigating what you shouldn't be investigated, as opposed to focus on the right investigation. Now, again, here the machine allowed us to refine our algorithms by looking at other tables that were actually the lineage of the detection with the transactions and with actually the different lists, the blacklists that we needed to look, and also in a way the variables that we were actually putting in those algorithms to show us that some variables were not necessarily. So basically the machine, by looking at more variables, started to show which variables were creating too many false positives. And therefore, we actually managed to get feedback from the machine to learn and understand how to refine our algorithms so we have less false positives. So we reduce the backlog, but we reduce the backlog in a more accurate way so we could prove the auditors that we were actually investigating now what we needed to investigate as opposed to wasting time. And that is a really good use case, because if you don't prove that you are doing that job in time, you can get big fines. So the use case there is very easy to then prove monetary return on how the machine is helping you reduce your backlog. And again, because the machine is very transparent on the variables, you can show the auditors that this is rigorous, it's not a black box, right? So that was another good use case where the machine helped us navigating the data and the algorithms in order to find more accuracy in our investigations. Next slide.
Yep, we just have another question from Karina. She's on it today.
Good.
So how much of this data is shared between other banks in order to have a united front against money laundering, for example? So there's open banking, but I myself, I'm not an expert. So
yeah, no, that's an excellent question. To be honest, this is a work in progress. So we are moving in that direction. The banking industry, exactly with that concept of the open banking, is moving in that direction. At the moment, what happened is that we use common data sets. So we often have external providers that give data to different banks, and that data has the information every bank uses, but it's not yet as integrated as we share with every bank. Is basically there are data providers that shares with the banks, and the idea is to move to open banking where we will start sharing with the banks themselves. And great question, because that goes in this direction of efficiency. At the end of the day, why investigating every single transaction, every bank, all the time and reinventing the wheel? If one did it, well, tell us that this is done, and then we don't need to do it ourselves. So yeah, we will gain in efficiency a lot, definitely.
interesting, cool. Thank you for the question, Karina. So moving on.
This is a graph just to illustrate how we reduced that backlog. So the beginning of the summer was those very high kind of lines of the cumulative backlog we had, and in time how these algorithms allowed us to kind of reduce and then be in control. Let's go to the next slide. This was just to illustrate the same thing. So let's click again on next. Okay, so now another very interesting use case, and now again, I'm moving in complexity and sophistication of the machine learning. So here we're talking now about trade finance. We are, many banks, and our bank in particular is very strong in trade finance, which means I say we're a very established bank in Africa. That means we basically trade between Africa, Europe, China, and Middle East, which means we often have a boat or an airplane or something that needs to be delivered from a continent to another. And you basically have a contract over there. You have a letter of credit, for example, and when it's delivered into the next country or next continent, you basically pay against the contract, right? So you transport goods and you finance the transportation of those goods against contracts and letters of credit. This is a very simplistic kind of way of explaining it, but it's just to give you an idea. So what that means is that traditionally there is a lot of paper. Let's go to the next slide. So traditionally, all this trading, and this is the reality of many organizations, were swamped in papers, in contracts, in letters of credit, in you need to verify this contract against the shipment, against also regulations, because of course, when you're moving goods, you need to make sure that those goods are actually legal and there is no country embargo, there is no even person or boat, or there is lots of international regulations. That means that you need to be checking a lot of documents and against a lot of regulations and against your own contract. And this could happen in many points in time, because if the shipment takes months, you have to check it at the beginning, you have to check it in transit, you have to check it at the end. So imagine the quantity of paper and the manual process, right? Very inefficient, very slow, and there is mistakes we can do. And of course, in the past, that meant also a big cost. So what did we do? Let's go to the next slide. Here's where I was talking about more sophisticated artificial intelligence, if we can call it, in the sense of natural language processing. And this is, I think, where the banking industry will start having a huge, huge transformation, because all these organizations were very paper and document heavy. And before, the machine learning and the artificial intelligence was very used on structured data, which means numbers, which means tables, which is what I was explaining in my first part of the presentation. But the technologies were not yet there for processing words and language and documents. And now it's starting to be there. And that is creating a revolution, because basically it is helping organizations, instead of relying on paper, they're digitizing those documents. And once it's digitized, you can ingest a lot of those documents, classify them, extract the right kind of places of, imagine if I need to check a document against a contract, well, the machine will actually look and compare very quickly. If I need to check against a regulation, a sanctions list, as I say, embargo, forbidden goods, etc., the machine will go to those data sources and very quickly basically compare one against the other. And basically, it will automate all this process of ingestion, classification, extraction, index, verification, and prioritize maybe a couple that maybe the human then go and check, but as opposed to check exactly everything every time. And this is a real revolution, because it allowed us to do many things: reduce costs, reduce manual and human errors, and actually prepare us, very important, to grow. If we do more transactions, well, we can cope with volume. And most importantly, it has proven, for example, with the pandemic, it was a great example of how organizations are becoming more resilient. Because before we started this process, we were relying on paper, meaning documents that needed to be sent to the bank, and people physically be in the organization, in the bank, doing it manually. Luckily, we started digitizing this before the pandemic. What this meant is, the moment we have to all move and work from home, everything was in a cloud, digitized, and the machine was helping doing this and sending to the screens of the computers at home of the people that needed to do the verification at the end. Without this, we couldn't have moved to work remotely. So this allowed us, also, organizations, to become more flexible, more robust, and more resilient, and be ready to growth. Is a great use case of how technology, digitization, and machine learning and augmented intelligence of machine is making workers much more resilient and also more efficient. If we go to the next slide, this is an example of how we have reduced, for example, document scrutiny checks from 3 hours to 20 minutes. And if you need to do that, multiply by the documents. Now, as I said, you need to check documents against contract. You need to do process of language, but also of regulations. So it's a very clever system that has, this particular has 250,000 algorithms. And that's why I say this is a very kind of sophisticated machine learning, artificial intelligence, if we can call it this way, because not only it understands the language, the grammar, the syntax, and can compare documents, it can also interpret regulations and database that are there, and help the humans then to only narrow down their work to what is really essential. Again, is not 100% certainty, is 95%, but we check the other 5%, and that allowed us to be more efficient. And that's what I was saying at the beginning of the presentation. 95% is good enough because the efficiency gains are huge already. So for a business, that is already a reduction in cost and risk, and an increase of flexibility. Therefore, the machine is paying the investment, if you want. We can move to the next slide. Yeah. So the next slide is another use case that we're currently actually working on that is very related to the previous one. So this is what we call KYC in banking. KYC, KYB is know your customer, know your bank. So basically, when we onboard a new customer, we also need to do a lot of checks, right? You need to know if that customer, what is their credit score, if it is a customer that has a high risk, because it could be, again, related to any sanctions, related to any anti-money laundering regulation. So you need to, again, check documents, and you need to check regulations and databases. And before, all this was done manually. So if you now were talking here of the front office, before my other example, the trade finance was my back office, people checking documents in the back office. Here is my business development guys that basically are there to increase their business. So what they want is to sell more and make more money and get bigger bonus. They don't want to be checking documents, but they have to. They have to actually, every time they onboard a new client, they need to do a due diligence process. Even more so, not only they need to do it in the moment that they onboard the client, if the client has a high risk profile, every 6 months, they need to keep checking. If it's lower the profile risk, every year or every 18 months. But there is an ongoing review process of your customers all the time. Imagine doing this manually again and again and again when you want to do more business. Now, machine learning and natural language processing and big data algorithm processing allows to automate part of it. And again, it gives you much more efficiency. It reduces your risk, because basically when you onboard your customer and you put it in the CRM will check against a lot of databases, against sanction lists, against all the what you were doing manually, and will give you the credit score and the risk score, and will maybe tell you this is a high risk. So then you will go maybe and check, is a low risk, okay, I'm good, I will move to the next. So the machine again is helping the worker to do their job faster and more efficient, and in a way focus on what they really want to do, which is do more business and bring more customers. So again, a very good example of how machine learning and artificial intelligence is helping to do to increase revenue in a way by freeing the time of the business development guys to focus on business rather than on paperwork, if you want. Let's go to the next one. This is another example that now we are exploring, the banking industry is exploring as well, which is related to what I was saying before. When you onboard your client and you have an intelligence of the client, you know which product that client uses, what type of investments they are doing, or what is their portfolio, or what type of risk profile they have. Now the system can go and mine external data sources, and similar to the way we can mine documents and process natural language, you can also process news. For example, you can go and mine information that is out there about companies, about any movement in the market, in order to see if, for example, an opportunity for a customer arises, so I can then call my customer and have a nice discussion and say, look, we know that the market is moving this direction, or there is this company that is gonna launch this project, or do you want to invest here, etc., etc. So this is creating discussion points to increase your opportunities to work with your customers, to maybe increase their portfolio, their investment, their products. And again, all this is by mining data out there with internal data. So my knowledge of my customer, my knowledge of the market. And if I didn't have that, I would need to read news myself every morning and spend hours and hours to find an opportunity so I can make a call. Now the system is giving me hints and say, maybe these are your 10 customers calls you could call today about these 3 topics, and I can click on them to check the topics to see if really those topics make sense. Maybe out of those 10, maybe 8 are good ideas, 2 I let go, but I want so much time because the time I turn on my computer, I grab a coffee, the system is already giving me a list of calls I can do, as opposed to before I needed to really go all my morning looking at news and then maybe go for lunch and then I will have my calls. So really, again, it's time to value, is increasing the opportunities for our business development and traders to go and find business. And again, this is the machine. And that's what I was saying is augmented intelligence. The machine is an ally with my worker that is giving them more time to focus on doing what they want to do, which is bringing business or being efficient or actually making more revenue for their own customers. So another good example, and I think with that I have covered some examples from understanding our data, mining our data, creating value from data, automating processes in the back office, and then empowering our business development guys. So if we go to the next slide, just to end the presentation, I like to say that data, and this is what I call the data value triangle. So when I started the journey in the bank, I say any organization can get value out of data in 3 areas, and probably if it's not one of them, at least, or all of them, actually, at least one of them will come. Let's click 3 times so I show you the 3 angles. So these angles are either coping with regulations, and I show at the beginning that my data classification was in order to go and be compliant with the GDPR. I show some examples of being able to comply against anti-money laundering, against transaction regulations that we need to be actually detecting possible fraud, etc., etc. So the regulatory area is a very important area, especially in the banking industry. We are very regulated, and data and the machine helping us processing data there are a lot of use cases there, and it's easy in a way to get investment from get a budget if you want to produce those projects, because if you are not compliant, basically you have a fine or they close your shop. So very easy to create ROI there. The second area I show is about improving processes, automation that allows our workers to be more efficient. And again, that helps reducing costs. So the ROI there, the return on investment, is also in a way straightforward to prove. If I was doing a process of checking documents that was taking me 3 hours and now it's taking me 20 minutes, well, you do the maths, how many workers, how many hours I'm making actually money there. And then the last angle is increasing revenue or increasing value, which is the last type of use cases I show about how your KYC automation allows you to focus on talking to more customers or onboarding more customers, how mining the data of the market and mining the data of your customers allows you to have more conversations with your customers and eventually expand your portfolio, expand your revenue. So the more you move around those 3 areas, and the more data and softwares and machine learning allows you to create, in a way, value in every area of those 3 angles, the more you are going to transform your organization. And I think that's where the banking industry is actually moving forward, is really finding use cases in every of these areas where data and artificial intelligence is helping to move. Let's go to the next slide. That is kind of a summary of those 3 points. The digital transformation of the banks are moved by, I was saying, regulations. I talk about GDPR, anti-money laundering, and also how that's giving us more operational resilience. Let's go to the next slide. On the other side, if you want to click many times, so it will bring all the, and the next one as well. This is a
slide 25, and as obviously animations, I just don't want to overdo it. Oh, there we go. That's all.
There you are. So this is just a summary of what I presented. Different use cases in every single angle of this digital transformation. Again, those were examples. There are many more, but I hope that gives you a good idea of where the banking industry is going and how artificial intelligence and data is helping us to be more efficient and actually work better.
Yeah, so with that, I think we've got time for one question. I'm a bit mindful of the next session that we have coming up. I'm just going to say, really good session. Not everyone on this call, I know for a fact, that signs up to these sessions is, well, working on their AI or studying it, but of those that are thinking, are doing it, and of those that are obviously going into finance, I think we'll be getting some thank you emails there for sure. But yeah, let's just have a look. Let's just give a few seconds. If anyone has any questions, please do ask it now. We add a thank you to Santiago. That's good. That's good. And I think if we have no other questions, I think we're all out. We'll slowly draw to a close. Would you like to throw in any closing remarks, Santiago?
Well, just to say thank you everyone for your attention. It was a good session. I appreciate the fact that questions were coming in and out as I was speaking, because that makes more of a conversation. And an invitation, if you have any other questions, feel free, Christian, to give them my email, the personal email you have. And yeah, happy to get in touch with you guys if I can help, and great to see you as well, Christian. Thank you for the invitation.
It's absolutely my pleasure. We had another thank you message coming from Ayotunde. I hope I'm not butchering the name. I probably just have. He said, "Excellent and insightful presentation. Many thanks." So obviously,
thank you, Ayotunde. Thank you.
Just a closing remark from me. So we do have another presentation starting in 9 minutes. You're getting a little bit of a break, so we're going to close this session now. But again, so session in 9 minutes. We've got another session tomorrow, and then 2 on the Friday. So do join us. There's more interesting stuff coming up like this. And yeah, thank you everyone, and thank you, Santiago. That was really good.
Yeah, guys. Thank you, Christian. Cheers. Enjoy the rest.